All right, welcome back. This is the Something Ventured podcast. I am Kent Lindstrom. I am your host. This is part 2 of my conversation with Rick Marini. Rick Marini is the founder and managing director of Protocol Ventures. We talk a bunch about that here, but essentially that is a fund of funds focused on investing in other funds that are focused on cryptocurrency. It's a really compelling strategy, and you'll hear a bunch about it here. Rick has, if you haven't heard the previous podcast, go back and listen to it. But Rick has founded and sold at least 3 companies. And on top of that, he has very recently been named one of the top 50 angel investors in Silicon Valley. This is my conversation with Rick Marini. This is the Something Ventured podcast.
And, in the U.S., things got really heated in Q4 of 2017. We saw Bitcoin in that 2-month period increase by about 119% in just 2 months. And a lot of that was fueled by speculation from retail investors coming into a market and really not knowing what they were doing. And then they all got kind of washed out in Q1 when a lot of the smart people said, okay, well, I'm going to cash or I'm going to short this market because you had a lot of kind of new money, uneducated money coming in. And most of those people have been washed out now. And, we had hit 20,000 in Bitcoin mid-December, and today we're at, 75 or 8,000. So we've definitely seen a decline, but we never should have saw that up to 20,000. That was just speculation. And a lot of that was driven in the U.S. Yeah.
And here's an interesting, I'm trying to figure out what to map Bitcoin to, because everyone says, oh, well, it's like 99. It's like all kinds of different years. One thing that seems different to me is that with a lot of people are saying, okay, there's this technology, so all these things are going to happen. There's going to be smart contracts. There's going to be, land, like all these use cases. That's not really how the internet worked, though. The internet, like GPS came out and someone literally built Uber. People didn't sit around for 5 years going, oh man, there's going to be this car sharing service and there's going to be this hotel thing like Airbnb. It just happened and everyone went, oh crap, now there's that thing. It seems like with the blockchain, everyone's like, predicting all these things are going to happen. Like, what does that map to? Like,
where I think we are with blockchain is that we're Internet 94. So I came out of undergrad in 94, and I think a lot of people, but not everyone, saw the potential of what the internet could become, right? This disruptive technology where you could connect the world and do email and all these cool things. But listen, back in 94, we were on dial-up.
Yeah.
Right. It took 10 hours to download a movie. Now it takes 5 minutes. Right. And it took time to get there. There were things that happen today, like we all live our lives on cell phones. We could not have predicted that 20 years ago. Right. No way would we predict that this little device in our hands, in our pocket, has the power of a supercomputer, right? A Cray supercomputer from 30 years ago. Yeah. So it's amazing what's happened, but we didn't see that. I mean, what we saw is, wow, this is going to be really disruptive. This could connect people. This could disrupt lots of existing companies. That's all I say about blockchain right now. We're Internet 94. Like, I can give you some potential use cases, and that's probably tip of the iceberg. I don't believe in tokenizing everything. I don't think that that's realistic. I also don't think blockchain is like the savior of the world. I think the internet, for our lifetime at least, will be the most important technology advance ever. Blockchain is not at that level, but blockchain is going to change a lot of things, and the use cases are, kind of countless on what it could do. I actually think that it will improve things on the enterprise side first. The consumer side may lag by several years, but I mean, there's just a lot of obvious things on supply chain management and provenance of certain products that you can put onto a blockchain and save a lot of money. So I think enterprises will adopt that first. I mean, you're already seeing IBM and Oracle and SAP and Salesforce and Facebook and all sorts of great companies adopting blockchain. I think that's where we start. And again, we are the equivalent. Let me make this clear. We're on dial-up right now. It's like Internet 94. There's 1,000 websites and it's really slow and it's kind of boring, but just wait, like give it some time because everybody wants it to be where the internet is today. And you know what? It's going to go a lot faster because we have the internet. So there are things that we've learned in technology that we can apply to blockchain. So it'll get there faster, but it's not going to get there overnight.
Like, why is this? There's something about this. And the reason I've been following it is that there's all kinds of technologies in Silicon Valley, but people are, you've started a fund of funds. Naval Ravikant's into it. Andreessen Horowitz has opened up a whole new fund focused on this. there's lots of technologies. There's artificial intelligence, there's demand networks, there's all kinds of things. Nobody's kicking down as hard on those things as they are on cryptocurrency. Like, what is, or in the blockchain, like, what is it that's so obviously different about this? It's not just a couple people. It's a lot of smart people moving careers and capital into this thing in an unusual way, I would say, for Silicon Valley.
Yeah, I think that blockchain, I'll say blockchain technology has the ability to do things on a global, scalable basis. And, drones are cool, and I like drones, but it's not a piece of software that is going to change things from banking to real estate to legal to supply chain management to all the consumer applications we haven't even thought of. This is something, again, akin to the internet, not as big as the internet, but akin to the internet where, drones are a cool piece of hardware and VR is really cool, but not everyone is into VR. This is something that is just enormous, right? And we're early days. So I think a lot of us, whether it's, me or Naval or Chris Dixon or Elad Gil or, other great people that you mentioned, we were all there in 94 for the internet. And we're all seeing this and we're looking at this like, whoa, this could be the next big thing. We're seeing this right now. And I think a lot of us, believe in it and want to get behind it and push this forward.
So what is a fund of funds? And why is that an important part of this? I mean, it's an interesting part of the ecosystem. I think it's probably one of the most significant things that anybody could do when you have complete uncertainty. I mean, this is characterized by uncertainty, right? Like how you trade this stuff, how you invest in it, how you get exposure to it. I imagine there's a lot of people around the world, and by people I mean pools of capital, saying, don't know what this is, need to be in. And I assume that's where you somehow come in.
Yeah,
with
that's
the fund
right.
of funds.
Yeah, so Protocol Ventures created the first fund of funds, and I'm happy to explain that. Not soliciting for any new capital, but just to explain what we do. And a fund of funds model basically brings capital into the fund, and then we try to intelligently deploy that across the top funds in crypto. So at this point, just a week ago, there was a new study that said there's at least 312 crypto funds that they're tracking. Right, so over 300 crypto funds. What we try to do is invest in the top 10. So we're in 10 funds now. We try to bring complementary strategies together, whether they're large funds or emerging funds or long short funds. And we have different strategies that we pull together. And the goal there is to provide diversification. And if you're invested across the top 10 funds, you should be able to outperform the market, which we've been able to do significantly. So it's really about how do you diversify into a volatile market. And for most people, they have no clue where to even get started in these 300 funds, right? They wouldn't know the right questions to ask. They wouldn't even know how to get through the door to these top funds. So that's what we've been able to do. And, really the spark was I was investing, like I said, for the last 4 or 5 years in crypto. And for a lot of people, what turned out to be a small amount of starting capital ended up being a much bigger number just through appreciation. Right. I mean, if you're in Bitcoin or Ethereum or just some of these, you did well. And then what happens is you get worried about custody. And you're like, ooh, okay, now I have a big number. It started with play money. Now it became a big number. I got to really think about this because if I get hacked, that's a big deal. Yep. So with custody, you've got things like cold storage where you take your crypto offline. You maybe put in a ledger or Trezor. And you've got things like multi-sig wallets. So you've got more than one person kind of turning the nuclear keys to unlock the crypto. So those are best practices that you want to use. And if you don't know those things, you shouldn't have a lot of money on an exchange, on a hot wallet, because it could be hacked and you could all of a sudden lose a bunch of money. So that was really what got me started, is to saying, whoa, I've got a bigger, pool of capital here now through appreciation. I got to be careful on custody. And by the way, crypto trades 24/7 and two of the biggest markets are Korea and Japan. Mm-hmm. So if you're not up during the Asian hours, you're missing out on half the market. Right. So obviously one person can't be up 24 hours and probably still have a full-time job. So you really want to have, I believe, money with the best teams that have people around the clock to do that. So that's why I started to invest in some funds personally. And then I realized, wow, I'm already investing in several funds so I can diversify. Maybe I should just create a fund of funds model because there's going to be a lot of other people that are going to want this kind of access.
Interesting. And so is it like Wall Street where there's all the different, some people day trade all day long. Some people just buy a bunch of gold and hold it. Some people have a theory that they're going to study the fundamentals of each? Is it that thing?
It's all of the above. And what we've tried to do is we have several funds in our portfolio. I can think of two off the bat that I would consider more of a Berkshire Hathaway buy on weakness and hold long term. I have several funds that are actively traded on a daily basis that are long short. So not many funds short the market, but of the 10 funds we've invested in, 7 of them do short. And I really like that they'll short because that gives you the ability, especially in 2018, where the market has been down overall, to be able to continue to make money or at least mitigate risk in those down months by shorting, right? So that's an important strategy as well. But and then we've got actually 2 emerging managers that are moonshot funds, meaning they're only raising a small amount of capital because they're going after thinly traded small cap where you couldn't put a large amount of capital without moving the market. So, there's lots of different ways to make money in crypto. And what I try to do is take a fund or 2 on each of those strategies and put it all into a fund of funds.
Well, what's cool about that is I have never heard a topic with more binary opinions from really smart people. So I'll listen to a podcast and I will walk out with somebody saying, we haven't even seen the cryptocurrency yet. You haven't even seen the Facebook yet. It's some coin you've never even heard of. It's going to be Chia or something like that. And then I'll be like, oh, that makes sense. And then I'll listen to another podcast and someone will be saying, it's Bitcoin. Bitcoin already won. It's got the dominance. It's got the brand. It's going to be Bitcoin. Don't even bother with anything else. There's a whole company called Zappo that does nothing but store your Bitcoin in cold storage. And I go, oh, that makes sense too. Like I've never seen more sort of like divergent opinions that all sound pretty good to me.
There's a lot of smart people that do have very different opinions. But one thing that I think most of these smart people agree on, including Jamie Dimon from JP Morgan, who is one of the most intelligent, most powerful bankers in the world, he has always said, I believe in blockchain technology. Yeah. He has just said, I believe cryptocurrency where it is today is a speculative market and it's an overvalued market. And I actually agree with him on most of that. I definitely think blockchain technology is real. I mean, it's software. I mean, it's just, do you believe that software engineers can build good, great software? Yes. Okay. Well, then the blockchain software idea is real. In terms of cryptocurrencies, many of these currencies are way ahead of the ski tips on valuation. Of the 1,700 crypto assets that exist, I would say maybe 100 are legitimate. The other 1,600, either some of them are frauds and scams, and you're going to always have some of that, which is really unfortunate and that needs to be cleaned up. And some of them are cryptocurrencies that are started by teams that, saw kind of a money grab and wanted to get capital in the door and try to build a project. And most of those, like startups, will fail. And I think the startup failure rate is around 85%. I would say the ICO failure rate, in my opinion, is going to be 95%. Yep. Because an ICO is basically very different than an IPO, right? An ICO is non-dilutive financing, right? So it's, to me, a glorified Kickstarter. You have a white paper, you've got your idea, and you put that out there, and then people can fund that. But why are you raising, 50 million, 100 million or more in what's really a seed round, or let's round it up to a Series A? What the heck do you need $100 million for in a Series A?
Right.
That sounds pretty crazy, right? At least for most startups. And then, you worry about their ability to execute. And at the end of the day, you actually didn't buy any equity, right? You're giving them this because you believe that their coin or token is going to be used, and that the value, it's a scarce commodity, that the value of that will go up someday. Ooh, that's pretty tough. And that's the other reason why I did a fund of funds, is that trying to parse through these ICOs is really difficult, especially if only, I believe, 5% are going to make it. You want to be behind the best people in the industry to be able to assess, that 5% and who's going to win.
And how does this feel? I mean, it won't keep you much longer, but how does this feel making this transition from being, really being an operator and running I mean, you could start a venture fund, presumably being on the, I don't know if they call it a Midas list, but the list of top angel investors. That's a pretty clear path. You could have been an operator at another company, but you're pretty committed to running something that's probably closer to a hedge fund than a venture fund, really. I assume the liquidity moves a lot quicker. Well, okay, the liquidity exists in a way it doesn't exist in a venture fund. How does that feel personally? Is it sort of like exciting? Is it different? What's this like?
Yeah, so I was an operator founder 3 times in my career over the last 20 years, and I did that, and I loved it, and I was very fortunate to have 3 exits. Like that was great.
Insanely unusual. Like people way overestimate the probability of an exit. 2 is nuts. Three's crazy, but
it's hard. It is hard, and I feel very lucky. And and me and the teams that I was with, we all worked hard to get there too. I mean, it's a roller coaster. There's plenty of hard days to get there, but we're fortunate. So, we talked about why I'm excited about crypto and where I believe we are in the cycle and getting in early now. And you're right. I could have started my own fund, either on the venture side or the digital side, digital asset side, trading crypto. The reason I didn't do venture up front is because I really love that the returns in crypto are not only crazy returns. Last year, Bitcoin went up in 2017, was up 14x. Ethereum was up close to 100x, from 8 to 800. Bitcoin went from 1,000 to 14,000. 14x to 100x return. And I love the liquidity. It trades 24/7. So unlike venture, where you typically have, I'm an LP in many funds, Excel and others personally, but it's a 10-year horizon. Right. Maybe you get distribution starting year 7 or 8, but you're kind of heads down for 10 years. For me, the liquidity and the appreciation was so interesting on the digital side, not the venture side. It's on the crypto side. Yeah. Number one. Number two, why did I do a fund of funds instead of my own fund? I found 10 people in the world that are better at this than me. And when you have these kinds of returns, don't try to save nickels or whatever. I mean, go for the dollars, right? So I felt that these 10 people have an asymmetric understanding of blockchain technology. They have they live and breathe crypto 24/7. So the informational advantages they have, because it's still a pretty small market and they're just thinking and talking crypto all day, and they've got teams that can go do that. And I thought their returns would be much better than mine. And again, much better in a volatile market can be really big. So I thought the best way to play it was to invest in those funds. And again, that sparked the idea for a fund of funds.
Well, and as Axe of Axe Capital says, fundraising is half the job. Is that true for you? Like fundraising is half the job, or is it crypto so the money just comes flying at you?
No, I wish. So here's the reality is that of the 300 funds out there, I think 250 are going to fail. And
by the way, that's not, how did 300 funds, I mean, that's to my point of like something's different here. How did 300 funds emerge? Was it their Wall Street guys just kind of go, I know what that is, or?
The Wall Street guys are just coming in now, and I think they're going to come more and more. I think a lot of currency traders are going to come into crypto because currencies trade 24/7, and there's going to be a lot of parallels, and they're going to want to come in here, although the currency markets are huge markets compared to crypto. Crypto, the total market cap is less than 300 billion today as we speak. It's tiny. Gold is 8 trillion. I mean, crypto is like I say, early days, really, really small market cap.
Wow. So I've got to ask you, are you Satoshi?
Hold on. You did ask about the 300 funds and where they came from.
Yeah,
Let me answer that question. I'm not Satoshi, but I do have a theory.
I want to hear your theory.
Okay. So the 300 funds, why I believe 250 will fail is that most of these funds have been started by, 1 or 2 people that made an early bet, maybe in Ethereum, could have been Bitcoin, but a lot of them were Ethereum. And again, had a 100x return last year and said, wow, this is awesome. Why don't I get leverage, get scale, and bring in OPM, right? Other people's money, and then I can get my 20% on a much bigger asset base. Here's the problem. And I love billions and Axe, and fundraising is at least 50%. The other 40%, let's say, is legal, accounting, and admin. Oh, and then the last 10% you get to trade.
Yeah.
Well, these people who are starting these funds typically want to trade. They want to do research. They want to trade. They want to read white papers. They want to get into the code base. That's the fun part, honestly. The fundraising part is not fun. Yeah. The legal, admin, and accounting is even less fun, right? So I think a lot of people will start these funds and then realize, oh, this is not what I thought it was going to be. I am now not being able to do what I'm good at, which means my returns will suffer, which means I won't be able to raise capital, right? So I think 250 of these go away. And so my job was to meet with the top 50 and then pick the top 10. So that's what I've tried to do. I think a lot of people are grossly underestimating the actual role of a hedge fund manager, because part of it has to be the fundraising, because you're the manager. You have to get in front of LPs to raise capital and tell them your story, right? So that's a big part of it. Okay, so Satoshi. So, as most people know, Satoshi Nakamoto is a pseudonym. We don't know who exactly that is. As I talk to smart people in the industry, people who think they know, typically what I've triangulated in is that it's not one person. It's actually a set of three gentlemen. Okay. And those three came together and put that white paper together and just used that Satoshi Nakamoto name as the author, even though there are three major contributors.
And why would they go so quiet? I just find this whole thing fast. It's got nothing to do with anything, but it's just interesting. Why would they go so quiet? Like they're in the history, Satoshi's kind of getting these three people, but there's an email exchange with him and somebody else in the real world, and then there's kind of a day when it's like the last email anyone's ever seen, and then the block that Satoshi controls, everyone knows which it is, or the crypto the Bitcoin he controls.
And they've never
moves.
Never moved. They've never sold. Or the wallet's never sold.
What could that be?
Well, I think the early days of crypto were the cypherpunks, right? Yeah. So the cypherpunk movement was a bunch of cryptographers that really wanted to do something around digital currency, and they wanted something that was immutable. They wanted something that was tradable, and something that was outside of any governmental control. Especially if you think about the white paper was written in 2008. That was the time that the U.S. and really the global, but definitely in the U.S. went into the biggest recession that we've seen in our lifetimes. Okay.
And if you, as I recall at the time, like now, it was a big recession. It was like a pretty scary time. Like I talked to people who thought the ATMs were going to stop working. Like we were pretty close to the gears like freezing. Yeah. At that point.
We were far worse off than most people realize. Yeah. I mean, I had some very smart people, classmates, that were putting hundreds of $1,000s in their mattress. Right. Like, I mean, literally, these are like my HBS classmates that are in high level investment banking roles. Things could have been really, really bad. And we got, lucky that some smart people stepped up. So, the timing of it is interesting around 2008 when we're going into this major recession. And I think the early days they wanted to create something that would change the world and outlive any one of them, or any spotlight on any one of them, or all the negativity. Everyone's probably got skeletons in their closet or whatever. So this was a way that create this mystique and this legend around this. And to me, the most incredible thing about Bitcoin really is the incentive structure, where you have both an altruistic, which is you write to the blockchain the next block if you basically win Bitcoin as you write to the blockchain. So you got a financial and an altruistic incentive structure, which is really, really smart. And it's incredible. It's like, how are you going to get all these people to mine your currency? Well, if the currency is worth something, then they're going to continue to mine, and these miners write to the blockchain, right? So you're giving them both sides of the incentive. Super, super smart. And this was something that it's like, hey, this white paper exists. We're only going to mine 21 million Bitcoin. Like, everything is set. Go. And it's awesome, right? Because it takes away any kind of, they were trying to do this decentralized, control function. So good. So take yourself out of the picture that you are the person that is leading this or, behind it. It's really smart.
Right. I mean, do you think you're in all the strategies, so it doesn't matter, but what do you think between the sort of like, hey, it's Bitcoin, that's it, or dude, you haven't even seen it yet, it's going to be invented next year?
I think where we are today, if you said, hey, I've got $10,000 to invest in crypto specifically, I'd probably say, not investment advice, by the way. I'd probably say, I don't know, put like 8,000 in Bitcoin and 2,000 in ETH, or maybe Ripple or some other, altcoin. But right now, it is the obvious use case is Bitcoin. But I also believe on the second part of your statement, which is we haven't seen Facebook or Google. Like, to me, Bitcoin is probably Microsoft. Like been there for a long time,
Will
not
be
going
there, yeah.
anywhere. It is, it's going to be a leader in technology for a long, long time. Ethereum maybe is Apple, where it's more about the developer community and the ecosystem. We haven't seen Facebook. We haven't seen Google. We haven't seen any of those companies. It's so early.
It's so exciting. So where would you guide people who are interested in crypto? They're probably not, maybe not the level of investing in your fund. They just want to kind of get into it. Where would you guide them to, like, just get started in buying a little bit?
Well, first off, do your research, do some reading, because when you're talking about putting money into something, you need to be educated on what you do, right? I mean, what happened in Q4 should not have happened where, I'll give you an example. I had a friend of mine who is a smart guy, went to college with him, and he opened an account at Coinbase, and Coinbase is a fine exchange, and the UI is really simple. And he called me and he said, well, I put 10,000 in and Bitcoin's at 14,000, so I couldn't buy that, so I bought a bunch of Litecoin because it's cheaper. I said, everything you just said doesn't make sense.
Right.
You can buy any fractional amount of Bitcoin. You can buy $100 of Bitcoin.
Yeah.
It's not treated like a share of Berkshire Hathaway, like you just have to, buy it by the share price. So I said, A, that's a mistake. And B, why did you buy Litecoin? He said, because it's cheaper. And I said, you don't even know what it does. Like, most people don't realize Litecoin is actually a fork of Bitcoin, but believe me, he didn't know that.
Right.
And so get educated first, number one. Number two, and by the way, I mean, educated, there is so much reading out there that you could do. If you want to follow someone on Twitter, I'd say Naval Ravikant is one of the best at tweeting. Chris Dixon over at Andreessen, follow his blog. Kyle Samani at Multicoin, where it's a really good blog. Tons and tons of research available out there. So start with that. Then number two, when you're ready to invest, if you look at your portfolio allocation, you're going to have stocks and bonds, maybe you've got some real estate or maybe a little venture capital or private equity. That last 5% of your portfolio that's considered your high risk, high reward, that's where crypto should come into play. And maybe it's not all 5%, by the way. Maybe it's 2% or 3%. So whatever your net worth is. So if you have $100,000, maybe it's anywhere from $1,000 to $5,000. And if you're talking about that kind of, that range, I would probably, like I said, just buy Bitcoin, maybe a couple other altcoins. But you could open an account at Coinbase, or there's dozens of exchanges out there. But that's what I would do. Do the research, then think about portfolio allocation, maybe only putting up to 5% or less to get started. And then to me, not investment advice, but to me, Bitcoin is probably the most straightforward way to get into crypto.
And can people follow you on Twitter?
Yeah, so I'm at R Marini.
Great.
On Twitter, and I do tweet a lot about crypto, for sure. Crypto and angel investing. Maybe once in a while, I'll picture my kids, but mostly crypto and angel investing. If you want to follow me.
All right. Well, thanks so much for doing this. Congratulations on Protocol Ventures. Congratulations on being named to the Forbes Top 50 Angel Investors. This is fantastic.
Thanks. Appreciate it. It was great to be here. Thank you.
All right. This has been the Something Investor podcast. I'm Kent Lindstrom. See you next time.